CRT and Turtle Soup secrets. Liquidity pools. Now, as you guys know, as a Romeo trader or as a CRT trader and Turtle Soup trader, we always want to focus on the 1, 2, 3 concept, which is 1, the key level on the left side of the chart, 2, the time, and 3, the pre-manipulation liquidity pool. And the pre-manipulation liquidity pool can also happen on during the time, right? Now, the topic is going to be about the pre-manipulation liquidity pool, which is, some people call this the advanced liquidity pool, they call it whatever, right? But all we know that what this specific concept means is that, is there enough liquidity to reverse? Now, let me further explain. Is there enough liquidity pool after it subs this pre-manipulation liquidity pool in terms of key level? Is there enough liquidity for the market to reverse from the specific price point? If it's yes, then you reverse sharply. If it's no, then you will see a huge run through, right? And you get stopped out. Now, in this case, your target would be somewhere down here. So you would have been out of the market. You would have not get stopped out, because this would have been considered as a quick Turtle Soup trade. But as you could see right over here, liquidity pool determines whether that setup will work or not. Now, there's controversies. People say 1 and 2 is much more important than 3. 3 being a mid-patient liquidity pool. I actually disagree with that. I think the 3 is much more the 3 is much more important than 1. The 2 is much more important than the 3, right? Because time has much more than price. And the key level, you don't really have to wait for the key level. You can just wait for the Mar 1 confirmation and then duration block, right? Without waiting for much. So the pre-manipulation liquidity pool does matter a lot. Now, that doesn't mean go and trade 2 and 3 all the time. Don't worry about the 1. I highly suggest focusing on all 3. Now, if you get the 1 and the 2, but not the 3, don't take the trade. If you get the 3 and the 2, you don't get the 1, don't take a trade. If you get the 1 and the 3, and you don't get the 2, don't take the damn trade. Now, as you guys know, everything in trading is equal. I made an analogy before where if your risk management is correct, if your psychology is correct, if your position starting is correct, and if your, what was the next one? I forgot it. There was 5. I know that I'm gonna talk about the edge, but other one was what? Execution discipline. If your execution discipline is right, but you don't have the right edge, you're gonna lose in the long term, right? Everything is long term. Everything matters. Now, let's say you have the right edge, you have the execution discipline, you have the risk management, you have the position sizing, but you're fucking emotional. You're gonna lose in the long term, right? So that's why it's very, very important for you guys to treat everything as equal. Don't treat it as, okay, I'm just gonna focus on 1 and 3. I'm not gonna focus on the 2. Right? You're gonna fail. All of it must be there. Now, people are like, well, what if the market taps on 1 and 3, but 2 and 1, but it doesn't tap the 3, and the market reversed from that price point? What do I do then? Just wait for the next day. There's always a next day. Your capital won't be there, but the market will always be here, right? So treat everything equal, right? If it doesn't happen that specific day, cool, just come next day. If you have another day, cool, come next day. But it's gonna eventually happen, right? It happens multiple times out of the month. Now, with that, as I said before, treat everything as equal, right? Because market will give you high quality setup just like this, right? It's a very high probability setup, beautiful reversal, right? And also, these usually cause instant reaction, which means V-shape, right? V-shape reaction, which we all want to look for, right? It's the most luxurious one, which happens rarely, but when it does happen, it's beautiful. And the best way to catch these trades are always going to be to the specific ICT/Romeo concept. Now, make sure you guys, before we go any further, make sure you guys like, comment, subscribe, share, join the Telegram, link is down below, and I'll see you guys at the Telegram. Like after the video, right? Don't click off right now. Wait until the video ends, right? So that's all. So there's nothing much about this liquidity pool. I always wait for it, and a liquidity pool is an old high, says old low, right? That's all it is. Now your one is going to be a key level above an old high, below an old low, especially when what key level I'm talking about, a fair value gap / order block, or when they paired above an old high and or below an old low, which is what? Liquidity pool. So you could say above in liquidity pool, below in liquidity pool, or if you want to make it more simpler, which liquidity pools are just basically highs and lows, just say above old high, below old low, right? These always give you best V-shaped reaction trades. Now, other than that, excuse the way I say ums or us or ums. I know I'm gonna try my best to avoid these sayings. I'm trying my best to avoid slangs, profanity language. So if I ever do talk like that, and I'm going to try my best to talk slow, I just literally noticed it right now. Talking a little bit fast. So let me cool down and talk slow, because we're here to eternally improve. Now, that's all to liquidity pools. I could show you guys my example here, but all you're looking for is a liquidity pool would be an old high or old low. Now you want to pair, as I said before, everything's equal. You want to pair 1, 2, and 3 together. Now the 1 has to be a order block / fair value gap primarily. A breaker won't work because they're a order block and fair value gap are imbalances, which will refill, right? Which will always refill. That means there's a lot of liquidity in it. A breaker isn't, right? A old high, old low, a high / low above an old high, old low doesn't make sense because they're both liquidity pools. That's why you look for these two specific concepts only, right? So you must pair all the 3 of together, right? The 1 must be above the 3. The 2 doesn't have to be above anyway. It's going to be a vertical line, but they must be like this. 1 must be above / below the 3, depending on the market direction if you're buying / selling. The 2, just mark it out the line, the time. Now, the 1 when it's above the above the 3 or below the 3, there must be an order block or fair value gap, and you must the candle that's when the order block is above says below the liquidity pool or the old high or old low. That's what we call it. When it's above it, it must be souped within 2 candles max. So right when it soups the liquidity pool, it must tap your key level within 2 candles max, because total soup are quick. They're meant to be like this. They're not meant to be, and they're not meant to go slow. They're meant to go fast. Because fast means somebody's controlling the market during that time. So fast means good. Next thing we're looking at is the old high / old low must be a valid high / valid low. Or what would happen is that market will sweep out the high, tap your key level, give you some sort of reaction, but go up higher, right? So it'd be like trend, retracement, trend again, which you don't want. Like, because we look like, well, fuck you mean by old high, old low? Old high, old low basically mean the same thing. And is there enough liquidity pool to reverse from? Because a failure swing, as you guys know, basically doesn't have enough liquidity pool because they already took out, especially in 15-minute time frame. 15-minute time frame, there is none. And the daily, weekly, I don't care because that's a daily fucking time frame. There's so much liquidity there, right? But in a 15-minute time frame, it's not. So there's much more candle prints. The candle prints every 15-minute time frame, every 15 minutes, right? So the candle shapes matter. Is it a failure swing? Is it a valid old high, old low, which is basically means a bullish bearish for a buy side liquidity, bearish bullish for a sell side liquidity, right? And it cannot be a failure swing. It cannot be a equal high, equal low, because equal high, equal low means portion of the liquidity pool has been taken out. And the other next one is going to be it can't be bullish candle. It can't be bearish candle. It needs to be bullish bullish. That determines it to be higher quality, especially in the 15-minute time frame. As you guys already know this, right? Because the T-minute time frame is such a low time frame. There's a candle appears every 15-minute time frame. So how do you know does your little time frame order block will cause a reversal? Is by these specific metrics, right? Because market could have gone over here and reverse, right? Why did it not reverse from here? Why did it reverse from here, and why did it not go over here? Because it followed the specific metrics, right? Now this 15-minute order block isn't gonna cause a huge reversal. It will cause a huge reversal if it's clear, down move. But in this case, because we're supposed to wait for a deeper retracement before going down lower. But the 15-minute time frame is just a small candle, right? It usually get ran through quick. So that's why we wait for the specific metrics to avoid our candles getting ran through, and we can have a clear total soup. And that's all to the specific concept. I can show you guys more example, but I don't think there's any more examples. It's the most perfect example. I'll show you guys what you need from it. You need all of them to be there. Everything is equal, right? Everything is equal. Every single thing is equal in trading, right? Because trading is a different industry than the other industries. Some industry you can focus 1 week on marketing, other week on this, that. This week, trading specifically, you gotta focus on everything, not just your edge, which should be this chart. Not just your edge. You have to be edge, emotional, risk management, position sizing, the execution discipline. Are you disciplined enough to execute a trade? Are you disciplined enough to short down right when it hits your entry model, right? Not waiting for deeper dig in, right? Don't hesitate. Right when this happens, don't hesitate. Execute, which is all that which is what I do, right? Because I'm not gonna wait for a deeper dig, because it's a 15-minute time frame. The market maker is not give a fuck about 15-minute time frame. Market's gonna move, right? Move quick based on the 15-minute time frame. The daily time frame go wait because it's a whole daily candle, right? 15-minute, there's a candle every 15-minute time frame. Every 15-minute, I mean, right? So basically, it prints pretty quick. So yeah, thanks for watching. Make sure you guys like, comment, subscribe, share. Join the Telegram link in the description below, and I'll see you guys inside the Telegram. And make sure you guys like, comment, subscribe, share. Trying to talk about that, I think pretty sure. Make sure you guys follow my Instagram and my TikTok. But yeah, I'm gonna try my best to stop talking profanity language. Stop talking in slang. Stop saying ums or us or hus or hms. Stop taking a long break on my speech. And lastly would be, what would it be? That's all, right? That's all I noticed myself. And talk slower, right? And I try to talk slow in this video, because to me personally, I think I'm talking pretty slow. So yeah, so majority of you guys, I'm not talking slow. So I'll try my best to talk slower from moving on forward. Peace.